If your mortgage is coming up for renewal, there's a very good chance you're about to overpay by thousands of dollars. 68% of people do. And the worst part is they think they made the right decision. I know this because I used to see it happen every day. Because most people think at renewal, they're choosing a mortgage, but they're not. They're just reacting to an offer. This is what actually happens at renewal. And this is how to know if you are going to overpay before you sign anything. So I worked inside one of the major lenders on their renewals department, and I would see the same pattern over and over again. Renewal would go out, client would open it, sign it, and send it back. Not a phone call, no questions, no friction. And since that was the default behavior, lenders understood that pricing didn't need to be aggressive. Because think about it from the lender's perspective. If most people don't question the rate, there's no reason to offer the best rate up front. Because at the end of the day, the lender's goal is to make the most profit that they can. So at renewal, the lender is not asking what rate is fair in the market to offer this loyal customer. Instead, they're asking what's the highest rate that this person will accept. And those two are not the same note. And this is the most common thought process that so many people get wrong. They think, I've been with this lender or bank for years. They're going to take care of me. But loyalty, it doesn't set your rate. Behavior does. And the moment that your behavior changes, your rate will change also. This is where it really starts to matter. And honestly, this is where things get even more interesting. The lenders understood that some mortgage files were not going to just be easy. That they knew this one's not going to get signed automatically and sent back in. So how did they know that? Well, there were already questions being asked. Brokers were asking for rates, and clients were looking to explore different options. And when this happened, the rates started off sharp because now the lender's assumptions changed. It then became this rate has to hold up in comparison to all other rates in the market. So if you don't want your rate priced like someone who's just going to accept an offer, what should you do? If your mortgage is coming up for renewal in the next 120 to 180 days, don't do what most people do. Don't just sign it and move on. At the same time, you don't need to overcomplicate it. You just need to break the default. It's just 3 simple things. First, ask your lender, is this your best rate? You'd be surprised how quickly that rate changes with this simple question. Second, talk to someone else. A broker, another lender, just see what else exists. And the third, compare it properly. Well, how do you actually evaluate it? Most people think that the only thing that matters is rate. And rate is super important, don't get me wrong. But the rate only works if it matches your reality, your timeline, your flexibility. What could change? Because if those things don't line up, that good rate can become a very expensive decision. There are 4 numbers that actually matter. Rate, penalty, how long you're going to be in your mortgage, and your total other debt. Again, where most people lose their money is focusing only on one, the rate. Because if your life changes and your mortgage doesn't fit anymore, you don't renegotiate it, you break it. And that's where the costs show up. Not up front, later. And look, that's it. 3 steps. Don't overcomplicate it because one extra conversation changes how your interest rate is priced. So if you take one thing from this video, it's this. Don't confuse convenience with a good decision because at renewal, you're not being offered a rate based on fairness. You're being offered a rate based off what the lender thinks you'll accept. And 68% of people prove that assumption right. Don't be one. So before this video, you might just have signed your mortgage renewal and moved on. But now you're looking at things differently. And that shift alone puts you miles ahead of most homeowners. But here's what's still missing. Even if you understand how this works, most people still get this step wrong. Because knowing what to look at and actually knowing how to negotiate are 2 different things. So before you sign anything, watch this next video. I'll show you exactly how to position yourself for this negotiation so that your rate will actually hold up. Because once you sign, most of your options are gone.